Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
Well, there is some recovery. There was a day so far. Markets, of course, down about 100 points, which means it's looking much better. It is actually a green candle, which means that we are now trading above where we opened early in the morning. This is, of course, closing bell. We're coming to you from the CNBC-TV18 Motilal Oswal Budget Headquarters. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios, and Nigel is joining in from the newsroom floor. Guys, good afternoon.
Hi, afternoon, and much better when you compare it to the kind of cuts Europe is reeling under. Frontline European indices are down close to about 1.5%, and the Dow futures is down more than 500 points.
Yeah, absolutely. I mean, I think it's all rock and roll today. We'll see how it plays out and whether the impact is done in one day itself and what happens. And the bigger impact, because the mainland Chinese market, of course, was not trading today. That was not open. But we've seen a fair amount of, red across the rest of it. Having said that, for us here, it's been not that bad. The Nifty is trying to claw its way back up. Nigel?
Well, that's right. It's actually a pretty good-looking screen in comparison to what the globe is doing. And also keep in mind that in the month of January, India underperformed. So let's see whether or not we can give back some of that underperformance and outperform from here on. But the screen is looking good. 120 points down with 60 minutes to go. I think the bulls will take that. Though some of those stocks that rallied very, very hard on budget day, they're giving back some part of it. Case in point being a United Spirits, a Jubilant Foodworks, both of them currently at the low point of the day. But you can't complain when the Nifty is not down even around 0.5% or thereabouts.
Absolutely. And look at the market breadth for starters. Actually, market breadth is not too bad, too good. It's about 3:1 in favor of decline still. So broader market seems to be hurting a little bit more at this stage. Actually, why don't we just look at the small cap index? 2.5% lower. So actually, while the Nifty has recovered, the mid and small cap part of the market has not really. Mid cap index is off about 0.25% from the lows, but the small cap index has come up, is still at the low point of the day. So, just a couple of points. Risk off in markets, of course, on tariffs more than anything else. So the reason is not local. For once, it's global. Because so far it's all been local, and global markets have been sort of chugging along nicely till at least about a week and a half back. Now, I don't know if it's a tell, but just look at the Hang Seng market, right? Tariffs affect the market which is affected by tariffs, and Chinese, lots of Chinese stocks trade on Hong Kong. Actually, most of the bigger ones all trade on Hong Kong. So it had a shaky start, it had a down session, but it actually closed absolutely flat. And we've not heard anything very aggressive, basically because that market is not open. They're still shut for Chinese New Year, but we've not heard anything aggressive from Chinese. It doesn't look like they want to escalate. They want to de-escalate. Looks like it. I mean, of course, that does not preclude anything they may do from here on, but that's essentially the sense. So the Hang Seng actually closed absolutely flat, despite the 10% tariffs, and maybe there'll be more coming and all of that. So 0.5% lower, and I think a little bit lesser now. But it's the same kind of names which are up and down. Defense, PSU, energy, these are sectors which are taking a knock. And if you look at the consumer pack, that is up about 0.5, 0.6. And I think you can add the IT index to it as well, which is about 0.5% or so. So it's exactly kind of similar kind of stuff. Actually, IT was down on Saturday. That's the only difference. Otherwise, everything down on Saturday is down today. And of course, consumer did very well on Saturday, and it's up today as well. Rima.
But on consumer, the street is getting a little more discerning because the consumer staple companies, which largely gets reflected in the Nifty FMCG index, that's down nearly 2%. The Nifty FMCG index with names like HUL, ITC, Godrej Consumer, Marico, deep cuts, 3.5%, 4% gone on these, heavyweights in the consumer staple pack. So they're giving up some of the gains from Saturday. But on the other hand, perhaps the street believes that these budget cuts, that 1 lakh crore of saving is going to benefit these urban discretionary consumption stocks more. So Swiggy, Nykaa, Up and About, Eicher Motors, M&M, these are all premium discretionary plays, and these are stocks which are advancing. But again, as Prashant said, defense, PSUs, metals too, under pressure on the back of the global trade war, and capital goods and railways. That's the other pocket where you are seeing big cuts. So RVNL, IRCON, IRFC down deeply for the second day in a row.
Absolutely. I mean, the PSUs have been slammed hard, and it's cuts on decent volumes as well. Hoodco, RVNL, RailTel, and even in the private space, when stocks like NCC, for that matter, TexRail, all of them are down pretty significantly, PFC, REC, so the entire works. But what is higher? Overall, the mid-cap index is still nursing a loss of over 1%. That hasn't changed. But what is higher? Consumption, in any way that you can play consumption. And in the financials, probably Bajaj Finance is, one of the best examples. 4.5% there on that large stock. But even others have been, consumer durable makers like Voltas doing very well. Your QSR stocks like Westlife. Westlife's up about 5% as we speak. Symphony is up. Many names out there. Sapphire Foods, QSRs in general doing extremely well. So it's pizzas and burgers and maybe hotels and movies. Nigel, where are you spending the additional money?
Can't tell you.
I know, I should have asked. Silly question. Off-air conversation. I know the answer.
No. My money is going to go into SIPs. I've been telling you it should be that. And I'll, if there's any extra money, that's where most of my money goes on a monthly basis. That said, let's get in Mitesh Thakur onto the show. Hi, Mitesh. Good afternoon. Good to see you in. Mitesh, well, not so bad, right? I mean, at the start of trade, if someone said that we'll be down 120 points getting to the last 60 minutes, I guess the bulls will take it because we were down 250, 260 points as well earlier in the trading session. And the Nifty Bank has defended the 20 DMA as we speak.
So, actually, pretty good recovery from the lower levels. So I think, the key was one, we even dipped to about, a low of around 23,200, and yet we are now trying to get back and claw about 23,350. So I think closing about 23,350 should keep, the confidence going on the upside. I think if we get a closing about this, then a retest of 23,530, 550 zones is very, very likely. And therefore, the idea is to still wait it out and be on the long side, not, panic or exit your positions. On the stock side, I have a buy on Crompton with a stop at about 360 for targets of 380. And the other stock which I like, that's a buy on DMart. It had a big breakout yesterday, rather on Saturday, and, is now giving a pullback. So around these levels of 39.30 or 39.40, buy with a stop below 38.90 for a target of around 41.50.
Thank you very much for that. By the way, frontline European auto stocks are under severe pressure. So BMW, Volkswagen, these stocks are down close to about 4 to 5%. Renault is under pressure. And back home in India, it's the auto ancillary stocks. So Samvardhan, Motherson Sumi is also under pressure. The key reason is Trump imposing a 25% tariff on goods from Canada and Mexico. For more on the implications, Sudarshan joins in. And Sudarshan, there is an Elara note on this.
That's correct. So both these stocks, Samvardhan Motherson and Sona BLW, both stocks are under pressure. So Elara Securities has written a note on this. So saying that after this tariff imposition of 25% on both Canada and Mexico, basically how does it impact to both these companies? So Elara note says, Mexico and Canada produced contribution is at 30 to 60% for US sold vehicles, and contribution is highest for GM, Toyota and Volkswagen. It's 30 to 40% for GM and Toyota, and 60% it's for vehicle. Now coming to how did it impact to Samvardhana Motherson? Basically, Mexico contributes around 4% to its total revenue. And remember, all these like names, Volkswagen, GM, Toyota, all they are one of the basically major customers for Samvardhana Motherson. And that's the reason basically it gets the revenue, and its revenue contribution is around 4%. That's the reason you are seeing an impact, and stock is down 8%. Now coming to Sona BLW. For Sona BLW, Mexico contributes just 2% to total revenue. The note by Elara says, and bulk of the value addition of the products happens in India. Mexico is more used in assembly base, and if the end OEM shifts production to US, assembly base can be basically transferred to US facilities. So more impact is for Samvardhana Motherson, and it's very less impact for Sona BLW, but both these stocks are under pressure today.
Thank you very much for that. Prakash Diwan is now with us on the show. Prakash, these are well-flagged risks. We've been talking about the possibility of tariffs which will hurt auto companies right from Trump's campaigning days. But it looks like it's finally here now. So from a stock-specific action implications, what are your thoughts?
Good afternoon, Rima. So, it's quite surprising that the market is kind of making it look as if this has come out of the blue. In fact, most of these tariff-related friction should have been there right after the 20th of Jan itself. But look at this is exactly what happens when the President of the United States is indulging in severe negotiation. Before coming to the office, he said there's going to be a lot of tariffs. We came to the office and probably mitigated a lot of the risk, or sounded very complicit about it, or things placated a bit, and then he's actually started imposing those. So this is bound to happen. But the bigger worry is not from just these tariffs on Canada and Mexico. If you look at what's happening in Europe, particularly in the bigger markets like Germany and France, for example, the Mercedes management has actually gone on record in saying you should let Chinese companies come and sell entry-level cars, because 80,000 euro cars are not going to be sold here, but they're going to be sold in China. So we need reciprocal this thing. So China will probably start negotiating with a lot of the other countries when the US behaves like this. So that's going to be a bigger concern, because if Chinese companies come into other markets because they're getting pushed out of other larger markets like the US and all, things could be very ugly for Indian ancillary companies. So best is to stay away from the timing. But there's a lot which is there in our ancillarization ecosystem, which is domestic oriented. So you'll make a lot of money there because they'll also come off a bit because of the rub-off effect. But two-wheelers, domestically oriented companies, I don't see much of issues. You could probably stick to that. But yes, the global ones like Samvardhana, even what the other one, Sona, BLW, these are likely to get impacted to some extent. But I hope it doesn't percolate to the rest of Europe, which is much bigger for these ancillary companies.
On EU, Trump has described the US trade deficit as an atrocity, and he's repeated his previous comments that the bloc had really taken advantage of the United States. But we wait by to see if that.
EU's turn will come. So it's only China, Canada, Mexico. But I think very, very likely. I mean, it's because he said it.
He said
he'll
it.
Do
yeah.
it.
On UK, he said it's fairly balanced.
Yeah.
The trade deficit,
but the EU is a
much larger
bloc, and there it'll. So there are only three reasons for tariffs, right? One is this fentanyl. The other is, the 30 years, he said, US has had trade deficits with the rest of the world for 30 years. So we need to correct it. That's structural. And the third is basically you impose tariffs to pay for tax cuts in the US. So, and that's the reason why, the current tariff, what has been imposed is not the two. It's essentially fentanyl, which can be, which is in a way easier to, hopefully easier to negotiate. The other two are more structural. And that's where both China and EU, at least Trump in his mind sees them as sort of clear culprits. So that EU thing will happen. I
just know one thing. We have not heard the last of this tariff talk.
Oh, last.
One day it's fentanyl, tomorrow it'll be something. Today's just the day one. This is not going away anywhere. So markets will have to learn to trade with this excitement, I guess.
Absolutely. Well, I think let's bring in Aarti Industries, right, which is in focus in the back of a conference call post the third quarter numbers. And let's get some details going. Upasana is here with those details.
Well, certainly the numbers were a slight miss to our poll. Revenue and EBITDA margin was in line, while PAT stood much below our poll estimates. Now, company held its earnings call today morning, and here are some of the important highlights. Company has highlighted that the pricing pressure impacted the margins, which were down about 180 bips, despite the sharp ramp-up in volumes. It has also said that the growth in energy business could have been better, but bulk large shipment order got delayed from December to Jan, which impacted the performance. Company is seeing volume-led recovery in its non-energy segments. When it comes to agrochem, company says that it continues to see pricing pressure, and company has highlighted that polymers and additives continues to be on its recovery path. It has also said that January onwards, company is seeing gasoline naphtha spreads improving on a month-on-month basis. And it has also highlighted that the significant exposure of the company towards polymers and additives segment could see some tailwinds going forward, looking at the current market dynamics. Now, on US tariffs, the company has commented and said that all of us need to wait and watch to ascertain the US government's latest moves on tariffs. And company also needs to relatively look at the Chinese currency depreciation as compared to India, given the competitive pressure. In terms of exports, the company has said that the export for the current quarter stood at 1,000 crores versus 900 crores in Q2. And company has also highlighted in terms of its guidance that it is on track to meet its short to medium term guidance, and it targets EBITDA to range between 1,800 to 2,200 crores with a ROC in the range of 14 to 15% in 3 years.
Okay, all right, Upasa, thank you very much for those details there. So that's Aarti Industries in focus. Right now, the stock's still down about 2.5%. Prakash, hi. So we were discussing this, I remember last week as well, because a couple of the chemical companies just started reporting better numbers. SRF, it started with SRF and a bunch of others, Deepak Nitrite, etc. What do you think of Aarti, if you've had a look at the numbers? Any of the others in the bunch that you think have really turned the corner so one can take a positive call?
Yeah, so good afternoon, Sabhi. So I think Aarti numbers very clearly tell you the way things are in terms of transition, from a volume-led recovery to a price-led recovery, which should eventually happen. It's very simple. Aarti is the bellwether name. The reason why the stock's not fallen in spite of them missing some of the metrics is it's just fallen 2%, which in today's market seems very nominal, is because at 16,000 odd crores market cap, it's very balanced in terms of its replacement cost itself. Look at where the trailing P is. My sense will probably be about 35, 36. At its peak, it used to be about 1160, 1170 the price, which means it's available at a 65% cut from its all-time highs. So what's changed for Aarti is probably the trajectory, the volume shrinkage, the dumping from China. Some of the businesses that they got into were probably not the best of timing, but then they've built themselves to have a very significant global play and presence as things look up, particularly in Europe. So Brazil is the one that's taken off from what data we get from most of the chemical names. And I'm sure, if things look up on the other markets, which are bulk users or bigger users, things will look up on the agrochemical side for sure. So it's a good play. You just have to be patient for the recovery to happen. Now, whether you buy it before the recovery because it's available at lower valuation, or you let the valuation go up once recovery starts building in, it's a call that you have to take. But I think between SRF, Aarti, Navin Fluorine, you'll probably see DCM. You'll start seeing the semblance of change that's happening from the favorable side. But Aarti does stand out as a very well-integrated, balanced kind of a place. So definitely one of the best names. But timing, as I said, will depend on your risk, reward, and allocation perspectives.
Okay, all right, Prakash, just hold on to that thought. A few stocks in the last few minutes have moved to the high point of the day on very, very large volumes. Aditya Birla Capital, I think we should just pull up the intraday chart out there. That will tell you a better story. Big uptick is what we're seeing out there. They come out with a set of numbers. On the profitability aspect, it didn't look any great shakes. The revenue number was up by close to around 10%. And if I look at the AUM on the NBFC side of things, on the HFC side of things, there's a good growth out there. The mutual fund quarterly average AUM as well is up. So I think the share has taken a closer look into that. And that stock has moved to the high point of the day. And Jyoti Structure is another small cap company which has seen a big correction from the recent top. But the numbers that we flashed for you, well, they look pretty okay. And there appears there is some kind of recovery out there. Execution is picking up basically. So they delivered a big profitability number in comparison to a loss. So that's why one of the top volume gainers in the last few minutes. Any comment on either of these two, Prakash? AB Capital or Jyoti Structures?
So I don't track Jyoti Structures, and I know I've heard of this from a lot of social media chatter, but honestly speaking, I've never had a chance to look at it very actively. But on AB Capital, I can tell you this is exactly what BFSI names will actually start doing. It will start with the private sector banks, the larger banks, then the mid-sized banks, and then, of course, populate to the more healthier run NBFCs. But this is the space to be in. And I know it's almost sounding like a consensus call that, financials should do well going forward based on the budget and probably an imminent rate cut, which we'll just get to know in a couple of days. So I think AB Capital is representative of the change. Of course, it has its own structural changes that they've been able to bring in. And that's kind of, helped improve the P&L individually for that company. But I'm quite positive on that space. My sense is you will have to allocate more money to the banks and NBFCs. especially gold finance suddenly starts looking very promising given how gold is behaving and is likely to behave in this tariff war era. So yeah, that's a comment I would have, but nothing specific on Aditya Birla Capital to buy at this point in time.
Okay, all right. And we have Stofrost numbers as well that are flashing for our viewers. And those numbers, at least on a year-on-year basis, look pretty okay. Margins continue in double digits. And I think if I saw that number correctly, on the top line, there's a growth of close to around 8 to around 9% or thereabouts. We'll try to get you further details. Keep in mind, the stock has already had a good run. But Divi's Laboratory, that was a good set of numbers. Vinny joining in to dissect those numbers for us. Vinny.
Absolutely, a good set of numbers that was reported by Divi's Laboratories. Revenue, yes, that came in line with estimates, but margin much better than estimates. The profits of the company much better. So operationally, strong performance that has come in from the company. Let's look at the EBITDA margin of the company, 32% versus around 26.4% last year. So strong expansion in terms of margins, and we had highlighted it before also that the CS segment, that's the custom synthesis segment of the company, that is something that has been doing well, picking up pace. Now we're going to wait out for more details in terms of how has the growth been for that segment, specifically in the con call. But as of now, seems like that is working out for the company, supporting the margins, overall revenue growth of the company as well. Generic business overall, we know for most companies has been a bit under pressure, and even for Divi's Lab, it's expected to be a bit in terms of muted growth. Now, other positive trigger that one should be highlighting here is that Kakinada project of the company that has started the phase 1. Unit 3 has begun commercial production on 1st of January. This was one of the plants everyone was waiting for the operations to start for this plant. It was long due capex that the company had taken over the last few years, and that is why a big positive sign on that front is something that we're watching out for going forward in terms from the growth of the company point of view as well. And that is why Divi's Laboratories is buzzing in trade today.
Okay, all right. Thanks a lot for that, Vinny. Prakash, Divi's Laboratories seems to be getting its mojo back. You think so?
Oh yes, this is not the first quarter that things have started looking up. Even the previous 2 quarters did tell you very clearly that things are moving positively for them. Remember one thing, Nigel, the largest companies that are in this space are the ones who will benefit disproportionately and much earlier than the rest of them. So custom synthesis is not something which keeps going to everybody in the value chain. These are companies which have a very proven track record and capabilities to take on much more with very limited incremental capex. So that's what's happening. And imagine in 6 months, if Unit 3, what Vinny was referring to as the Kakinada unit, if that has to start contributing, you'll probably have even operating leverage coming. So very well poised at the current levels also. The risk reward is amazingly favorable. Where there are lots of other pharma companies which are still struggling to grow their this, especially the ones in formulations. But custom synthesis seems to be the buzzword, and there's no better play than Divi's in that scale.
Okay, all right. Prakash, we'll leave it there. Thank you very much for joining us. Always a pleasure getting your perspective on a variety of stocks and sectors. Thank you. We'll take a quick commercial break here, but just as we do that, leaving you with some sound bites. We spoke with Samir Arora of Helios earlier in the morning, and these are his views on these tariffs which have come through and implications. Slip into that break, see you on the other side.
The overall markets are down a lot, then India may outperform because A, it's not directly affected, and B, don't worry about markets like Taiwan because they have been closed for a week. So if you just look at how TSMC ADR was trading during this period because of NVIDIA and others, and then the TSMC local fall. So don't get totally carried away. A little bit you're allowed to get carried away. But the point is that the budget was good and this tariff situation is bad.
Welcome back. The Nifty IT index is one of the few, is perhaps the only index which is up in the green now, up about 0.5%, and gains visible in an Oracle Financial that's up 3.5%, Coforge, Wipro, Persistent. These are stocks with gains ranging between 2 to 3%, and on the way down, Zensar has seen a big cut, 8% lower on that. But let's continue with getting you more opinion on the budget. One day after, Neelkant Mishra, chief economist at Axis Bank and the head of global research, who joined us earlier to speak on the budget, he said, one should not ignore, the capex and the kind of stimulus that we've seen. Listen in to what he had to say.
We are hitting the limits on what the government can directly do in terms of capex, and therefore the guidance from the government was that we will maintain capex as a percentage of GDP year onwards, that the scope for us to do more is now gone. So now they're experimenting with, for example, this 1 lakh crore that they've decided to spend on urban infrastructure. They have to find such avenues so that capex continues, but there is very little more they can do at the central level. Investment activity in the country is going to be a lot more dependent on how well the real estate cycle turns, how well the power generation cycle turns. And I think this almost obsession with waiting for the government to spend an extra 30,000-40,000 crores, in the larger scheme of things, these are all rounding errors. The impact of this directly will be mostly on the discretionary items, so jewelry, retail, and somewhat, I think the market was responding rightly to this on Saturday. Cars, two-wheelers, etc. So at an aggregate demand level, remember that the deficit is still shrinking. So, and a large part of the space that is being created for these tax cuts were actually also coming from personal income taxes. I would expect direct impact on the segments which are affected by this. But overall, the questions on whether this increases inflation, whether this increases the current account, I don't think there will be any impact.
All right, Harsha Upadhyay is with us, CIO of Equity at Kotak Mutual Fund. He's joining us now to take some questions. Harsha, good to have you with us here. I trust you and your team have had, a day and a half more to look at the budget, analyze it, and sort of come up with conclusions, if I may use that word. This entire capex, infra, capital goods, power, that entire complex is coming down sharply today, and that was down sharply on Saturday as well. Is that a part of the market which will broadly underperform from here on? Can one go with that? Of course, I'm not talking about something exceptional happens. I'm talking about just the entire complex. What's your sense? I think the frame is frozen. Harsha, can you hear me?
Yes, I think.
Okay, he's back. Go on, Harsha. Go on. Yes, go on. We can hear you.
Yes, there has been some disappointment because compared to what the expectations were. I think the expectations from majority of participants was to see again government doing the heavy lifting in terms of the capex numbers. But I think given the fiscal roadmap and the fact that we have already seen a lot of investments from the government capex side in the previous few years, it was expected that it's going to be more or less around the nominal GDP growth. At least that was our view. And what has come out is also more or less in that range. What is heartening is to see that revenue expenditure has not grown as much as capital expenditure. And that's where I think government has used judiciously whatever the leeway that was available given the constraints on the fiscal deficit to spend that amount on the capital expenditure part. And hopefully our market will settle after a few trading sessions. It's not that it has been negative for the capital expenditure oriented businesses. It's just that it's been more or less similar to what we have seen in the past. There has been no increase as such. And whatever little bit of push that we have seen through personal income tax is for consumption-oriented businesses.
Okay. All right. Hi, Harsha. Good afternoon. Good to see you in. Harsha, if I remember correctly, you all had lightened your weight on industrials. Was that correct? Last couple of months?
Yes, we have been reducing our exposure to capital goods, engineering, and many other economy-oriented sectors.
Okay.
Yes, this is more to do with the profit given high valuations in this segment. So to that extent, our portfolios have few quarters, I would say.
Okay, all right. So that's about the capital goods and industrial space. But I think you're also optimistic on some of these quick commerce companies. And they've given you a big dip, if you look at it from the highs that we recently saw. And now you have, the consumption boost that's coming about as well in budget 2025. Good time to get into them. Harsha?
We continue to remain quite positive on the quick commerce space. Clearly, we continue to remain quite positive on the quick commerce space, and clearly this is one space.
Harsha, can you hear us? Okay, I think what we'll do is we'll try and connect Harsha. We seem to have Harsha on a bad line, pretty bad line. So we'll try and get him on a fresh line and see if we're able to do that. Markets down 130 odd points. Maybe we can use that time to just look at the big volume-led sell-offs that we are seeing. So maybe you can just quickly follow me and look at these prices. HAL is the number one volume-led loser this afternoon. It's down 7%. Hoodco is down 9% on very large volumes. RVNL, again, very large volumes. There is a 6% cut. Siemens has been down 9% for the last few hours, actually. And again, big volumes. HPCL is down 6, 324 on HP. It's the biggest loser in OMCs today. Mazgaon Dock is down 6% to 2240. ABB is down 5.5%. Look at something like a REC, which sells off another 5.5%. I mean, both REC and PFC have corrected quite a bit. Look at Motherson. Motherson is down 8%. And of course, we highlighted that earlier with our research team. Keynes is down another 6%. That's Keynes Technologies. JSW Energy is down 5.5%. In some way, most of these are old economy, manufacturing, industrials, capex, whatever you want to call it. NCC is down 6%. That's Nagarjuna Construction, 217. Look at CG Power, back at about 580 kind of levels. So 4.5% lower on CG Power. There is Anantraj, which is down 7%. Anantraj saw a massive decline, then a decent recovery. Look at Angel One, 6% cut, 23.36 on Angel One. Inox Wind is down about 6%. Motilal Oswal Financial Services, 620, 5.5 lower there. Garden Reach Shipbuilders, Rights, Railtel. Look at something like Texmaco Rails. All these railway names, once again after Saturday's session, are selling off. And there is, of course, Thermax, which is down about 8% as well. And all these have got humongous volumes. I mean, they're not selling off on small volumes or anything of that sort. These 15, 16 names, I think, that I just mentioned. I think Harsha is back with us, hopefully on a better line. Harsha, Nigel was asking you about the quick commerce companies and Zomato, etc., and they've corrected quite a bit. Your view now? I don't think... Harsha, can you hear me? Okay, I think Harsha cannot hear me. This is just a bad line, unable to get through. What we'll do is we'll take a quick commercial break here. Let's do that. We're going to come back and just listen to Rhythm Desai of Morgan Stanley. We spoke with him in the morning. He's calling it this a magic budget. And he explained why he thinks so. He also kind of spoke about where this tax relief to the middle class may go, which sectors. Listen in.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up. So I think consumer staples is certainly not the place where we go to. Consumer discretionary, I think, is a much better bet. And even there, I think at the higher end of consumer discretionary is where I think you will probably see some of this tax saved being spent. Some of it can actually also come into the stock market. And all this is actually auguring well for the economy. when you've hit sort of a spending capacity limit and you don't want to do wasteful expenditure, and again, we should highlight this point, and I'll come to this in a second. So just give me a second. When you don't want to do wasteful expenditure, this is the best next alternative you have, which is give it to the people to spend. And that's what the finance minister has done. So kudos to her for that.
Welcome back. The markets have recovered a little bit from the low point of the day. The Nifty is down 120 points, but keep an eye out on the broader markets. A few stocks have seen a good recovery. Varun Beverages, the stock went through a bit of a correction, a pullback from the recent peak. Now it's at the high point of the day, up close to around 3.5%. JSPL as well, I recall post the numbers, the street was a little bit skittish about the capex, additional capex that they announced. The stock was down close to around 10%. I think it's recovered close to around 70% of those losses. Currently, the stock at around 810 rupees at the high point of the day. The street is hoping to hear some kind of rationality with regard to the entire capex that they put out, because there's a big balloon up of close to around 16,000 crores of additional capex with no increase in capacity. But it seems there's a lack of communication that's played out there. That's why the street has bought into that dip. And that's one of the outperforming metal stocks after underperforming just last week. Mitesh Thakkar is back with us. Mitesh, what are the picks you have for us in terms of trading calls?
Nigel, I think, I would say while the overall closing is negative, the market has kind of shown some resilience. So, we'll try and look for long bets. Exide, after a good rally, has given a pullback and now, could complete a slightly bullish formation. So, we'll take Exide as a BTST with a stop at 370 for a target of around 380 to about 382 for tomorrow, most likely. And the other one is GNFC, which I would recommend a BTST with a stop below 553 for targets of 566.
Thank you very much for that. Let's watch the oil marketing companies under severe pressure for the second day in a row as the budget makes no mention of LPG subsidies. Jefferies today has lowered the target price on the oil marketing companies too. as they believe the government has capped the profitability of these companies. Sudarshan is here with more details. Sudarshan.
So all the oil marketing companies are under pressure, and the reason is budget did not have any mention of LPG subsidy, while estimates were of that budget would announce compensation for LPG under recoveries of around rupees 35,000 crore or more than that. So as of 9-month FY25, total under recoveries for LPG are of rupees 29,223 crore, with IOC forming nearly 50% of that. So in 9-month FY25, IOC LPG under recoveries were rupees 14,325 crore, which saw an increase of 62% if you compare from the level that it had in September 2024. For HPCL, it was rupees 7,600 crore. For BPCL, it was rupees 7,300 crore. So this is the reason why these stocks are under pressure. But there is another part to this story. Oil Minister Hardeep Singh Puri had spoken to CNBC-TV18 after the budget, and he said, unlike petrol and diesel, LPG is regulated. So, and government is committed to making the payment for LPG under recoveries. Listen in what exactly he had to say in the conversation that he had with CNBC-TV18.
Very clearly, we are committed to that. Even when we got it from 28,000 crores, there was an under recovery on LPG. We gave them 22,000 crores. You don't need to make a budgetary provision. We can go to the finance ministry. Otherwise, if somebody behaves like a good corporate citizen in the OMCs and they've had under recovery, we will compensate them. We are committed to that.
Also, the subsidy for PM Ujjwala has trended down, what we have witnessed so far, despite an increase in the number of beneficiaries. Also, do you feel there is going to be an increase in discretionary spend post the budget?
No, there is going to be enough provision for both LPG and that. Don't worry about it at all. You see, two things are happening. Insofar as natural gas is concerned, prices are coming down. Insofar as LPG, which is a product of a refinery, etc., we will look at that. There's no issue of no anxiety on that score.
Back to the markets then. The mid-cap index, which was down 1.5%, is down less than 1% now, so 0.9% lower. Even the small-cap index has managed to recover a tad bit. From being down 2.5%, it's now down close to about 2%, but still bleeding in terms of individual stocks and the cuts there. Sudeep Bandopadhyay of IndiTrade Capital is now with us on the show. Sudeep, any budget bets, any stocks that you've recommended as buy based on the budget?
I think, while the budget was good and, market at some point of time did probably appreciate there being no fresh allocation or incremental allocation for capital expenditure by government. But the fact remains that the budget was good. We have been talking about FMCG for quite some time, and we had always recommended HUL and Dabur. So that continues to remain in our list. Apart from that, aside of the budget, I think we have witnessed and we have been talking about chemicals and specialty chemicals. I think after many quarters of underperformance, gross underperformance, if I must say, there are green shoots visible. I think a turnaround is going to happen soon. So one can look at, Aarti Industries, SRF, all these chemical and specialty chemical companies deserve attention. The valuation is definitely attractive, and the turnaround is round the corner. Now, whether it will happen in the next quarter or the quarter after, very difficult to predict. But if you are a long-term investor, I think it's worthwhile buying into these stocks at reasonable valuation.
Absolutely, and point taken there. Sudeep, hi, good afternoon. Speaking after a while, and lots moving, right? Things have completely changed around. Names like Voltas, etc. Sudeep, any thoughts here? When I saw Voltas and Orient Electric, some of these durable names, basically. We've heard that space being mentioned a few times since the morning.
Definitely, I think there is a propensity for the incremental income in the hands of consumers going for consumer durables. Staples and other basic things, incremental consumption will probably be limited. Where this money will go, it will be in consumer durables, maybe small cars, maybe towards hotel tourism. So obviously, I think these are areas, consumer durable companies, air conditioner companies, which will attract some of the incremental money, and their demand is expected to go up. So probably that's why some of these stocks got excited. As far as Voltas is concerned, I think the last quarter numbers were not very impressive. There has been some changes in the management as well. So we'll have to wait and watch. However, overall scenario for consumer durable companies definitely is going to improve.
Okay. All right. Hi, Sudeep. Good afternoon and good to see you in. Sudeep, any view on JSPL? That's one of the biggest movers as we speak at the high point of the day. It was one of the big underperformers last week. The numbers weren't that great. It was supposed to be the big outperforming stock for this quarter among fairest names. And now, in fact, they went ahead, they reported little disappointing numbers, and then the additional capex hurt them. But valuation-wise, it's still well placed. They still have capacity that's on stream. Maybe it doesn't come on stream in the next 3 months, but it comes on stream in the next 6 months. But it's coming on stream, so volume growth will come about. Your take?
Absolutely, Nigel. I think the performance was okay, and the valuation I think is relatively attractive. Considering that there is going to be expectation of good demand, they will be in a position to cater to that demand through incremental volume from the additional capacity which is going to come on stream. So JSPL definitely, if you are looking at a slightly long-term investment in this space, JSPL seems to be a good bet considering the valuation at which it is still available.
Were you recommending any defense stocks to your portfolio? And now, what would the advice be if someone has an HAL, BEL, BEML, or any of these shipbuilder stocks?
Well, I was not really disappointed with the budget as far as these stocks are concerned. Budget has maintained the allocation of government capital expenditure pretty much at the same level as last fiscal. So for us to get so disappointed, I think is little unwarranted. Now, the other issue with these stocks predominantly was not, that they were not getting orders. When government has incremental capital expenditure allocation, the assumption is they will get more orders. Now, there was no dearth of orders for these companies. They were getting orders by tons. The question and the issue which was in everybody's mind was the valuation at which these were quoting and the delivery, the efficiency and the delivery and the profitability. Now, these things remain still where they were, and the order flow, to my mind, will continue. So, if you have to pick a defense stock, look at the valuation, look at the potential, and pick. I have been, advising buying into Bharat Electronics, BEL. I continue to remain positive there. And I think this correction which has happened over the last couple of days definitely is an incremental opportunity for accumulating this stock.
All right, Sudeep, we'll take a quick commercial break here. We'll come back. Stay with us. More questions coming your way. Markets down about 120 points. Stay tuned.
Welcome back. Well, let's hear out what S. Naren, Executive Director and Chief Investment Officer at ICICI Prudential AMC, had to say about the budget 2025.
Clearly, it was a budget which was focused on consumption for the middle class, and they gave money to the middle class. Whether they'll choose to save it, repay loans, or consume, this is the question for which we don't have the answer. But having said that, that is what the budget is about. This kind of shift was very logical on the part of the government, and so we don't complain. And I don't think it's a total shift away. It is just that you have to always, I think both the government and the regulators have to keep on doing things to help the areas which are not doing well, and actually to not give further support to the areas which are doing too well. We also have to be very cautious in sectors where things are very costly. So we have been cautious on small and mid cap. And we have been more positive on sectors which we used to be very negative on, like consumer staples, etc. So I think that's the way things should be. And that's the way I think long-term money is made, actually.
Okay, all right. Well, that's said S. Naren's views on the markets. Well, Sudeep is still with us. Sudeep, what about the capital market plays? Angel One, it was one of the outperformers on Saturday. It's corrected a fair bit from the top. The management, though, they have alluded some confidence that, they expect things to get back to normalcy. They're expecting a pickup in margins. And they say that maybe they don't have to take those price increases as well. But this one's come off drastically from the top. How do you play the capital market plays?
Well, I think capital market will have a lot of challenges in the near future. Look, very clearly, the market is going to be extremely volatile. And the upward momentum we had seen in the, till about, let's say, September 24 is definitely missing. The way the global markets are positioned, the way the US administration is going about, tariffs and other things, I think we are in for a turbulent phase. So under the circumstances, if the equity market is not going to be in a real fast growth phase, some of these capital market intermediaries will not have a great time. So I don't think we should look at some of these stocks at current levels. Not that even now, after so much of correction, they are cheap. If you look at the PE multiples, they are at very reasonable to high multiples. So my advice will be probably stay a little cautious there. If somebody is a long-term investor, some of the capital market infrastructure companies from a 3 to 5 year perspective does look good. Now, whether you buy now or wait for some more time and buy is a question which cannot be precisely answered. But the companies I'm talking about is CDSL, BSE, and the stocks like that, which definitely over a period of time will continue to reward shareholders.
Thank you, Sudeep, for that. Stay on. Divi's Laboratory is now piling on some more gains, 5.5% higher. Con call is underway, where the company says that Q3 has been a step forward in the positive momentum over the last few years. The generic portfolio will see additions, given the upcoming patent expiries over the next few years. The stock is now at the day's high. But earlier today, we also chatted with Gautam Dugat, Head of Research at Motilal Oswal Financial Services. Listen in to excerpts from that conversation.
On balance, I think it was a pretty decent budget print. Numbers are quite believable, as they've been for the last 4-5 years for this government's budgets. Second, without impacting the fiscal consolidation territory, they've shifted the scales away from consumption, capex towards consumption. If you look at the percentage numbers between FY21 to 24, the capex compounding was 31% in terms of allocation, but the next 2 years now is about 9%. The consumer companies' numbers have been absolutely weak. This quarter, there is actually a decline in earnings for consumer companies. Very rarely you see consumer companies post a cumulative earnings decline. So that is happening right now in third quarter. I think the earnings can continue to remain weak for a quarter or two. But the multiples have been derated over the last 3-4 years for staple names, basically, not for discretionary names. Now that reversal can happen, and numbers, again, as I said, for capex can follow after 2 quarters in terms of moderation. For consumption, it can accelerate after 2-3 quarters. Retail, some bit of auto, consumer durables, jewelry, hotels, those are the companies where you might see probably slightly better, performance. We're still underweight on staples. Maybe we will also realign a little bit of a weight within the consumption pack. But at the moment, we are heavily overweight on discretionary core staples. Actually, it's Trent, Indian Opal, and Titan.
In conversation still with Sudeep, he's been waiting by. Sudeep, in an earlier chat, you had spoken about two-wheelers, and you seem to like some of the two-wheelers. Now, based on the January sales numbers, where would your preference lie? Today, you're seeing Eicher Motors rev up quite a bit, but your preferred picks?
My preferred pick then as well as now continue to be Bajaj Auto. I think they have a very balanced portfolio. Look, even the numbers which came out today, exports have done well. And remember, the exports have a significantly higher potential. And I'm sure at some point in time during the next fiscal, probably that will get realized. Nigeria numbers are still kind of reasonable. They can be ramped up significantly. And I'm sure the company is working towards that. So if I have to look at a one two-wheeler company, I think it will be Bajaj Auto. Remember, their EV also is doing reasonably well. And they are already number one in terms of the pecking order as far as EV is concerned. So we'll keep watching this space, but Bajaj Auto will continue to remain my favorite.
Bajaj will remain your favorite. No, point taken. By the way, when you said capital market infrastructure, CAMS included in that list as well. You mentioned CDSL, etc.
Yes.
Any specific thoughts on CAMS, which was also corrected quite a bit?
Yes, Prashant, CAMS and KFIN, both I think we should include in that bunch. In these cases, there is an additional, positive. Some of these companies are also venturing into, our neighborhood countries, Southeast Asia in particular, and the potential of earning fees there, the fee there is much higher. So if they can ramp up those businesses in these countries, I think their earnings will move up disproportionately. So from a long-term perspective, definitely CAMS, KFIN, BSE, CDSL, worth buying. But remember, you need to be an investor with patience, 3 to 5 year kind of time horizon you should keep in mind and buy. And don't definitely buy at one shot, buy over a period of time.
By the way, Bharti Airtel is up 1.7%. It reports numbers on Friday, and perhaps the money which comes into the hands of people will give the telecom companies more confidence to take more frequent tariff increases. So perhaps that explains the up move on Bharti. But all in all, down 0.5% on the benchmark indices. Not a bad outcome considering where global markets are trading, or some of them have ended, and the news flow that we had in the morning.
Here's the googly Rima. What if between now as we close and tonight when US markets open, Trump says, well, I've made a deal, no tariffs. So what will tomorrow look like? Well, that's the unpredictability, right? Last minute something happens. It's, looking difficult, but nothing can be. You can never say no with these things. But 120 points lower is like any other normal kind of day. It's just that market has already been correcting quite a bit into the budget, out of the budget. The budget is not the reason. It's all these global market worries, etc., which have kept sort of risk at bay. Although, just look at the kind of stuff which is corrected. And there, I think you can take away some, you can draw a line or a link to what the budget has announced, which is, focusing more on consumption. Maybe focusing on infra as well, but more on consumption. And everything capex, infra, etc. has taken a bit of a backseat. Sharp cuts, actually, between 6, 8, 9%. In many cases, 10, 15 names which have come off. These are well-owned, well-traded names which has seen this pressure. So that's the overall picture. The bell's gone off. It's a wrap on this edition of Closing Bell. And from all of us here, it's goodbye. Well, decoding the impact of budget with market masters, S. Narain and Samir Arora. That's essentially the show for you at 3:30 today. So stay with us. That's coming right up.